Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Monday afternoon, we have Chris Dearborn, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq-100. And Chris, seems as if a number of the stocks in the index are having a tough December for sure.
Absolutely. It seems like some coals in the stocking for the Nasdaq-100 the last couple of days. The index is actually down for the last 5 days. And if today holds true, it'll close lower again for the 5th out of 6 days. So really, the path of least resistance here is absolutely lower. And that's what we're seeing across the market here coming into Christmas. Seems like a very big de-risking type of atmosphere. And there's a lot of macro news out there that's kind of supporting it.
Yeah, well, I mean, considering the year that we've had, not just the Nasdaq-100, but stocks overall, a reset is, it's not that unexpected, and considering the macro events, to your point. So
no, absolutely.
And Chris, not only that, and I think this is true of a number of indexes, there are, a basket of stocks that are really driving the direction of the market because of their composition and their weighting within the indexes, right? So there's no surprise there. I think when you look under the surface, and we see that, not everything is moving up 2 to 3% a day, does require a reset.
A little bit, yeah, it does, absolutely. And you are absolutely right. I mean, the COVID trade, if you go back a year and a half ago, was tremendous. And there was a handful of stocks that carried us through there. And most of those stocks have, $1 trillion, if not multi-trillion-dollar valuations now. So a little bit of pullback into year end, a little profit taking is not a bad thing, especially on this run up. And you've got some general macro factors. People have concerns over the new COVID variant. We'll have some questions on the Fed pivot and whether or not that's going to impact inflation or if they're going to impact the economy. And then down in Washington, there's a bevy of news between the new bill that's looking to be passed and then some of the Democratic senators who just saying it doesn't make sense how much they're going to spend because it just doesn't fly there. So, all that drama is adding to some worries here, and people are buying into a next trade. You had the reopening trade, then you had the back to work trade, and now you are looking at the spending trade on the Build Back America bill. And that may have some unraveling there. So that next leg of that trade may pull back a little bit until we get some clarity there. So absolutely, the big boys have led us. There've been a cycle of other indices that have moved around, but the big boys are coming back a little bit here, but they're still at tremendous valuations. Make no mistake about it. I mean, the valuations here are tremendous. So what's happening here at the end of this month, I'm not overly concerned. I think it's more of a rightening of the index and the market as opposed to anything more than that.
Yeah, and I agree with you there, Chris. Let's pull up your first chart. Take a look at some fresh technical levels to watch in the Nasdaq-100.
Yep. So as I mentioned before, we closed lower for the last 5 days, and today holds true. We're down about 175 points in the Nasdaq 100. May close lower again. The good thing is the index opened significantly lower than we are today. So we opened at 15,500. We're trading at 15,620 right now. Support sits at the 100-day moving average, which is 15,535. We penetrated that, rallied back above. What I'm really excited about here is on a Fibonacci level, 23.6 retracement from the 52-week high made back at the end of November. And that level is 15,689. If we can rally to that level and close somewhere within that range, this is going to be a very positive green candle momentum-wise into the market, despite the significant drop. The index is down almost 7% since we hit that high back on the 22nd of November. So look for that to hold. What also is supporting a potential near-term rally here is that the relative strength index, or RSI, is at a 42. Again, not completely oversold, but definitely at the lower end. And the last time we hit a 42 or a 40 level on this was back in, let's say, call it the beginning of the month when we penetrated that 15,689 Fibonacci retracement, and the markets rallied significantly back close to 16,500. So that's what we're looking for here.
All right, and Chris, our final chart of the day here, the constituents adding or detracting performance for the Nasdaq-100.
Right. There's only 19 names that are positive today, as you can expect on a significantly down day. 81 names go in the opposite direction. Almost all the big boys are down. On the positive side, you have Netflix in positive and a few others. But on the downside, you have Tesla, Meta, Amazon, Microsoft, Apple, Intel, Moderna. They just can't outweigh those mega cap weightings within the index. And Tesla's down another 3.5% today. At one point, now down 3.2%. Facebook's down 2.5%. You can't counter that without some of the other big boys moving the other way. So unless this changes here in the last 50 minutes of the day, it's a nice intraday rally from the lows, but I'm not sure if we're going to get to that level on the Fibonacci 15,689.
All right, Chris, appreciate the insight. Thanks for joining us
Thanks.
on Trade Talks. I'm Jill Malandrino.
Merry Christmas, everybody.
Thank you. Same to you.